In this video, I'm going to show you how to understand the basics of trading, day trading, like candlesticks and price action. So first, with the candlesticks here, we have green and red candles, right? They're normal. Okay, so a green candle starts. Let's just go to a random one right here. So this green candle, right at the bottom of this right here is called the body. This is the body, and these little lines are the wicks. So the body of a green candle, so this bottom of the body is where it opened at. This is the opening price of the candle. And every candle, right now we're on the 1 minute chart. So that means every candle took 1 minute to form. So if we go on the 1 hour, that means every candle right here you see took 1 hour to form. So if you just go 1, 2, 3, 4, 5, 6, 7, 8, this took 8 hours to form. But if we go back on the 1 minute, 1, 2, 3, 4, 5, 6, 7, 8, these took 8 minutes to form. So right here, this is the open, and the top of the green is the close of the candle. And the wicks, it's where price got to. So this is the lowest price got to right here, this 21.2236. And then the top of the wick is the highest it got to. So now with this red candle right here, the top of the wick, or the top of the body, is where it opened, and the bottom is where it closed. So it's the opposite. So this is the open, close, and wicks. The wicks are the highest it got and the lowest it got. That is the basics of the candlesticks. And for candlesticks, there's like chart patterns, so you can do candlesticks patterns. Okay, and right here you can see there's a whole bunch of different patterns. Oh, okay, this is low quality. Okay, so here you can see the high of a candle, the close, the body, the open, and the low. These are wicks, body, wick. So there's going to be candlestick patterns that show signs of bullishness, and bullishness means bull is price going up, bear is going down. So let's say someone were to say, are you bullish on Apple stock? That means you're hoping that price is going to go up. And if someone says, oh, you're bearish on Apple stock, that means price is going to go down. So if you're looking at bullish patterns, we can see, let's find a, so you see this candle right here with a long wick to the downside and then a body like this. It looks like a hammer. This is called a hammer candle right here. And this shows bullish signals to keep going up. So we have right here, price comes down, we get a bullish candle, and then price starts to reverse back up. You have to figure this out, where you could figure out signals. People don't trade patterns. That's not all that trading is. This is just the basics. So these are all, you can take a screenshot of this, maybe look at it, study it, but this is the basics of candles. So now that you know the basics of that, let's go to simple support and resistance. So let's go on the 1 hour time frame. Okay, now we can see that price is moving in this channel right here. Boom, and then boom. So now we have two lines right here drawn out where we reach right here. Where we reach what we call these is support and resistance levels. Resistance will be when price comes up, touches this right here, above here, and comes back down. And then support would be price coming down here, tapping this line, and then coming back up. That is support and resistance. So now we go back to the 1 hour. or 1 minute time frame, we can see that price comes back up to resistance right here, comes down, comes back up to resistance, rejects it, respects it, and then comes back down. Over here, see price comes down to respect support, comes back up. So that is the pure basics. You could use the pure basics of support and resistance. If you want to get into more technical ways of analyzing the market, you can learn ICT, SMT, smart money concepts, and all that. But for me, I keep it simple and I use supply and demand, which is support and resistance. So we see the price action coming to respect this level. Then thing to learn, but it's all really up to what strategy you want to learn. So next we'll talk about strategies. So strategies are you analyzing the market in a technical way. So technical analysis will be you analyzing these candlesticks, analyzing what's going on. And then there's something else called fundamental analysis, where you study the news, study what's going on in the company, like Apple, what's going on, how much are they earning, what's going on in the company. But that's fundamental analysis. And technical analysis will be this, studying charts, the candlesticks. So your strategy could be support and resistance, simple support and resistance strategy. So it could be coming up and then come back down. Once it gets to this level, you can just press sell, go short, and come back down. So you going long means you're bullish. You want price to go up, which means you press buy. So, and then for me to be short, that means I'm bearish and I want price to go down. So you can make money on both sides. You can make money when price goes up and when price goes down. So here we can see, here we can test out a strategy of mine. So let's mark out these, or let's test out the support and resistance that I was talking about. So here we have support and here we have resistance. Let's mark out a better one. Support would be like right here. Then resistance could be right here and then up here. So now here we are in the middle. Now let's see what plays out. Okay, so here we come touch resistance. So at the very basics, you can enter here for a short. Let's say 18, 190, then 18. For your strategy to work, you're gonna have to need a stop loss and a take profit. So we're gonna go short right here. So we're gonna want our stops to be right above this support level or this resistance level, as you can see. Okay, we have a wick right here, so you're gonna want to make your stops right above that wick. So you can see, boom, right here. Stops are right above it. Put it right here. Stops right above the wick. Then you're gonna have to learn what risk to reward is, and that's how much you're risking to how much you're gonna make. So right now I'm risking 11 points, 10.75, around 11 points. So we're gonna, for you to be profitable in the long term, you're gonna have to want to learn how to have a good risk to reward. So you're gonna be risking 11 points, let's say, to make 22 points. So that means if you lose one trade and you win one trade, you're still positive. You're still up. So let's say you're risking $100 to make $200. So you win $200 and then you lose $100, and then net profit of $100, you're still up. So that's for the long-term game. You're gonna have to learn how to do that. So here we have our stops above these wicks right here, and we're hoping price comes down to support this resistance level right here. So let's press sell. Okay, now we have our TP and our take profits. And now let's see if it plays out for us. Okay, looks like we got stopped out. So some will work and some will not. So some people like to do breakout trading, some people like to do range trading. So you have to figure out your own strategy on how to start trading. If you want to learn my strategy, I can teach you it, but you're gonna have to learn the basics first, because I don't like teaching the pure basics, because that's what this video is for. I'm not going to teach you the pure basics, when the pure basics you at least need to have before you try to find a mentor, you know? You at least have the pure basics down on how candlesticks work and price action. So as we can see, if we were to do the breakout trade right here, so we can see the confirmation. Let's go back a bit. Okay, so we get a close above this resistance level, means it finally broke out of it. And if we see some continuation to the upside, okay, boom, we see continuation. Now we could go long. This is just an example strategy. This is not my strategy. I'm gonna put the stops below this wick and then target 1 to 2. Boom. This is called the breakout. Let's see if it plays out for us. A bit choppy, but yeah, this is just pure chop. This is bad. As you can see right here, since we broke out of resistance and now we're playing above it, that means it's now treating it as support. That's why we have our stops below it and right below a previous wick. But this is just choppy. This is bad price action. This is not even like my fault. This is just the market's being pretty bad. When it goes sideways like this is choppy. This is when you don't want to trade. But right here, yeah, this is just bad. This is the worst example I could give right now. Over here we get stopped. But it's up to the trader to identify chop and see if you want to hold it through or not. And sometimes your strategy will work, sometimes it won't. It's just all up to the market. This is a game of probability, so that's why we use stops. We don't gamble. We use technical analysis, and we see what is going on in the markets. Okay, so here we have our support and resistance levels, and we're playing within this channel right here. So now we can see try the price come back up. Or actually, yeah. Let's wait for price to do something. Okay. So here we are at resistance. Now let's try to take a short just to see up here. Okay, so now let's try to find a wick. Okay, right here. We have a wick at this line right here. 220. So let's put it at 221. Just a point right above it. Boom, 221. Okay. And risk. You could target. Profit target levels could be down here, back to where you want to target, or it could be a previous low right here. So let's try to target this previous low, or yeah, that'll be a 1 to 5 ratio. Let's just do this high right here. Okay. Let's see if it works out in our favor. Got stopped out. As you can see, we're getting constantly stopped out. So the support and resistance isn't just a strategy. you need to have other confirmations. You can't just sell it up there just because it's a support and resistance level. You have to have other confirmations, like maybe an engulfing candle or something breaking an EMA or a fair value gap getting tapped into. Like you can't just have one confirmation, you have to have multiple confirmations. And if you guys want my strategy, let me know in the comments. I will post it. And yeah, that is how the basics of trading. So if you have still any questions, you can DM me at Christ Trades. It's the same handle as my YouTube, or just leave a comment. But that is the pure basics of trading. That is the simplified version. I'm not trying to make it too complicated for you guys. And if you guys made it this far, the software you can use is called Trading View. This is a free app, and it'll let you see the charts on anything. So futures, stocks, forex, crypto, indices, anything. You can see it, all of them. So this was the pure basics on how to start day trading. So hope you guys got any value out of this. Let me know. If you still have questions, this is a long-term game, so you will learn it over time, over experience, So over time, you will learn it. It's not too complicated, trust me. You'll be like, what the hell is he talking about? But over time, you slowly learn it. So please just believe in yourself and the process, and enjoy the process, enjoy the journey, because that's what it's all about. So thank you guys for watching, and peace out.